Hold on a sec.
So,
We are here with Austin Tobitt, Professor Meatball, and I are going on the Charles Payne show sometime this week, so we need to prepare. And so I have the handy dandy notebook. One side is dad jokes, one side is the research, the data from 6 months worth of grinding, digging, and following DD writers such as Austin Tobitt here, who has written exposés about Citadel, exposés about the entire economic market going downhill. And we need to have the reveal of what we are going to cover, the context and the content. So you guys are going to see a sneak peek, not only from my mouth, but from Austin's as well. What we're going to do some role play. I will be Andrew to begin with, and we're going to have Charles Payne we're going to have Austin as Charles, and we're going to switch it around to see how he would improve or perhaps change the narrative if he was Andrew and I was Charles Payne. So if you guys like this video, make sure that you see there's not 2,500 likes on it yet. Smash it until it gets up there and comment out which one you are. Austin, let's take it away. Give me only 3 minutes on the clock, and we'll switch it off at the end of that after a little bit of feedback. Let's go.
so I'm going to get a timer going here so I can make sure I'm tracking.
Oh, yeah.
And send it to 3. Okay. Andrew, thank you for having you on the show today. Thank you for coming and talking about this problem. This is naked short selling. And to me, I would like to hear your opinion of why you believe this is such a pervasive issue.
Thank you, Charles, for having me. First of all, I want to be able to tell you that this has been something we've been tracking for months. This is not brand new research. This is something that has been pervading the economic systems of the entire structure of your 401k, right? Of your retirement fund. Even if you only invest to be able to make a means to an end or learn something from the economic system, you will find that there are major ways that strong players, big players that call themselves smart money, are using different tools that were meant to catch fraud as fraudulent activity themselves.
Elaborate on that. What do you mean using tools that were meant to catch fraud and have now become a fraud?
Well, my predecessor that came on the show from Superstock, Wes Christian, talked about naked shorts in the past, right? This is far more pervasive than he was able to talk in his short amount of time. For example, I have to talk about Charter Communications, right? This happened in 2005. They had 88 million short interest in January of 2005, where they only reported an outstanding amount of shares of 36 million. So they had 240% short, and that was a tool usually used by hedge funds and other institutions to do price discovery, right? Understand where fraudulent activity might be happening and bet against fraudulent stocks by shorting. But now using the tool of shorting, they are burdening the stock with so much downward pressure with rehypothecated and naked shorting, fraudulent shorting, that would ultimately cause the stock to go down until bankruptcy, which actually happened back in 2005. So this is outside of the GME and AMC world. This is something that has been...
They went bankrupt in 2009. It happened in 2005, and then, you're good.
Boom. So right now, you are looking at stocks that hedge funds pick, right? And other different financial institutions pick for you in your retirement accounts. And when people see that their retirement accounts are going up, they think, oh, they must be because the hedge funds are using fair and equitable ways to increase the value of different stocks around them. No, sometimes it's about aggressively isolating a stock and ripping into your savings on behalf of big interest, smart money, as they call themselves.
Good. Okay, so that was 2 minutes and 40. And right there at the very end, you could probably condense that into, you're not always making money when other companies are making money.
Right.
Sometimes you're making money when other companies are doing poorly, and that's something that I think people need to look at and realize that it's more rampant than people think.
That's a great point. Sometimes you make money when companies suffer.
Yeah, and that's become a big thing, and so that was good. I think you're definitely getting to the meat of it.
Let's do it.
Perhaps going to, okay, well, go ahead.
You
asked me the same thing.
I'll be Charles Payne, I'm gonna
By the way,
dig into the 3 minutes
can
here.
we get C-Pain trending right now? I love that.
CV Pain on Twitter. Get him
C-Pain.
trending right now. With a C Pain as in the auto tune.
Yeah, like T-Pain as in T-Pain.
I think so. We could try.
C-Pain. We could try it. I don't know. If it sticks, it sticks.
If it sticks, it sticks. I'm putting it in the description. Get C Pain training for Austin. All right, I'm gonna reset that clock for 3 minutes. Austin, I'm gonna start in 3, 2, 1. You are now Andrew. I'm now Charles Payne. Thanks so much for having me. I'm Charles Payne. We have 3 minutes to talk about what you, Andrew Mo Money, have to say about shorts and the meme stock economy. Let us know what's going on here.
Thanks for having me, Charles. And we have been doing months of research to find out how pervasive naked short selling is. And really, the issue is much bigger than we can cover. But there are two main facets of short selling. And one is obviously selling the share when you can borrow it, and two is selling it when you don't have it. And you can also reborrow the shares once they've been lent. And there's no telling how many people are actually selling those or relending those shares over and over again, but they factor and they add up into the number of shares that are circulating.
Okay.
And so we see examples like this all the time, more often than people realize.
Okay, and how is this going to affect the person sitting at home on their stock investment right now?
So what you don't realize is a lot of people are actually invested in this. It's an issue where people believe that they're betting on a stock to go up. They're betting their investors or their investment broker, whoever owns their retirement account, is actually investing in companies that are hoping to do better or hoping to do, make recoveries and generate profits. But more often we're seeing the opposite, where you're making money, or your investor, your broker is making money by bankrupting these companies and driving them into bankruptcy. And I think a perfect example of that is Charter Communications, where they had a 240% short interest on their float. And the only way that can happen is because of naked short selling. So it's definitely a bigger issue than people realize.
Okay, well, how can you prove that Charter specifically had naked short selling? Has your data?
So the only way that you can prove naked short selling is by looking at the outstanding short interest, or looking at the voting rights, looking at the voter turnout, and being able to determine which shares are legitimate votes and which shares aren't legitimate votes. In this case, when you see in legal proceedings after cases have been disclosed, you're able to see the information that was within those cases, and Charter is a perfect example of that. So there's a PDF by John Finnerty, who is a professor of economics, who published those figures in that report to show exactly how this process happens. And the total number of outstanding shares that were used, or the total number of shares that were being used to short, or calculating the short, was 240%, or 88 million shares.
Okay, well, you only have about 20 seconds left. Thanks for coming on the show. Anything left you want to say?
Thank you for bringing attention to the issue. More people would really need to realize what's going on. And just for the person at home, just think that would you be okay if you knew that there was very little oversight in this process? Very little oversight.
Well, thank you so much, Andrew. And back to you, Professor Meatball. I'm Charles Payne. Good night. But fumbled my beginning with Charles Payne. I feel like we are coming up with fantastic one-liners here. I think Brendan Burns just dropped restoring investments to their literal definition here. That's
a good one. Yeah, it's you're investing in uninvesting.
Investing in uninvesting. Hedgies are currently investing in uninvesting. Hedgies are investing.
I think that's pretty slick. Yeah, that's a good one. Who sent that one in?
That's Brendan Burns.
Brendan Burns. You're a lyrical wordsmith, my friend. Thank you.
Lyrical wordsmith, indeed. Thanks again, Austin. And we'll let you know as soon as we know when we're going on the show this week.